Everybody, and welcome back to another video. This is how to invest. Let's hop right into it. And holy guacamole, you gotta be smashing my avocados. Look at this. Almost 20% increase in Playboy stock today. I don't want to beat a dead horse or continue to talk about the stock that I have quite frequently on this channel, but dear Lord, this is crazy. 20% for Playboy stock. Who would have thought? So let's get right into it. As I said, market cap was the most important, and is still under $700 million, which is still a bargain. It's still a bargain. Will double easily in the next year, in my opinion. And let's get into why I believe that. So if we look here, just from the 30th, which was 2 days ago, it has gone up from 15 to 23, almost on a parabolic run. And some of the reasons for that, I got into the last video on NFTs and the price target increases. And in this video, I will be getting into the third major reason, which is what I believe it's really rising for, is their earnings report, which I don't think a lot of people paid attention to, especially a lot of the suits with a lot of money. I think it was just not really well known. So if we go to Playboy.com and you scroll all the way down, I wish they'd have a tab at the top for the investors, but you have to click on About the Playboy Group. If you get here, you'll go to a page, and then you have to click Investors there. If you scroll down, you can find they released another investor presentation. I have already been over two. If you haven't watched those, please check them out. Great videos. Will give you a lot of in-depth knowledge on what the company is trying to make money from and how they'll get there. And this is kind of just an updated one to update how they have grown since. Now, they put out two within the span of, I think, 6 months or a couple months. And the reason they had to put out another one is just because that the company is growing at much faster pace than they projected. And that's the reason they put out another one today, or a couple days ago. So to start, we will go over to the earnings. You can watch the webcast, which will be people within the company talking about this and giving their 2 cents on it. But I already listened to that, and I will give you the rundown. This one is pretty short, only 4 pages. One reason for that may be because this is not a GAAP adjusted earnings report. They did GAAP company run by the higher ups because it is growing so quickly, and when you're growing quickly, you are often going to be taking and seeing losses. But the EBITDA is normally and all that good, and this is up a little bit to really give you a state of where the company's at and how fast they are actually growing. In no means is it a bad thing. If they did post the GAAP adjusted numbers, like I said, they would not be as good, and they would have losses on there, and it would be shown in multiple different places, and people would often freak out when trying to read it. And most people trying to read these things, in my opinion, don't really need to look for know how to read. So the first 3 things they say: fiscal year revenue up 89%. That is great. Anytime you have revenue up over double digits, even if it's 10%, is pretty good for a company, let alone only almost triple digits, up to 4.8 tier. Quarter of 50 million, all 4 million a year, growing not just year over year, but quarter over quarter, which is always a great thing to see. And a recent business combination adds 100 million of cash to the balance. We love words and highlights like year, 0.6 million in 2020, and then 8.7 million in the fourth quarter to 4.9 million. Net loss narrowed by 18.3 million to 5.3 million for the year. They only very phenomenal. Whereas in it, there are billions of dollars, 5 million, which we have ups to there. The net loss narrowed by to $500,000 in the fourth quarter. So they only lost $500,000 in the fourth quarter while growing their revenues at the rate that they did by 119% year over year. The EBITDA in 2020 was 28 million and was 6.5 million in the fourth quarter, and 2 million. Here are issues of the company. February 1, just some statements from the company, which because by now, if you've been watching the videos, you kind of know what they've been doing and where they want to be going. These are the numbers that they posted and how they got them. Some of the important ones that I thought were interesting to me were the let me look here. Total costs and expenses have gone up, obviously because they are growing at a rapid rate. I wanted to look at the assets. So right now, their assets have barely gone down for the year, and that includes multiple purchases of sexual wellness brands. So just the fact that they're able to keep as much cash on hand, cash equivalents, has gone down almost 50%, but that is not really an issue in my eyes, like I said, because they have made so many acquisitions and they are still in a great cash flow state right now. They are getting a lot of money in revenue, and they are making a lot of additions, which will help them grow revenue even more and hopefully cut down cost and become more efficient over time. Their liabilities are going down, which is a great thing to hear anytime that a company is liability. And the stock has gone down. Like I said, of addition. This right here is just saying that they did not use GAAP and kind of their reasoning for it, which I already explained, that sometimes when you use GAAP, it doesn't really give you the full story of how fast their company is growing and where they are currently at. If we look here, this is their net losses. Like they said, they only had 500,000 in the fourth quarter, and you can see for the year they lost 5 million. As opposed to last year, it was over 23. So that was it for the earnings report. And then one thing that I wanted to get into to end the video was in the investors presentation. There wasn't really much in here that wasn't already said from the earnings report, but they updated their $3 billion in consumer spend, which in the last investor presentation, if you do remember, was $2 billion. So I think this could be an accurate representation of where the market capitalization of the company could go within a year, just over the fact that if they're selling that much product over and across the world, then I believe it would be more than reasonable for their market capitalization to reflect that. So from there, it would be over a 4x. So if you were looking to get into this company and feel that you are late or missed the boat, by no means do I believe you are. This company only went public in February, this only went public again in February 22nd, like they said, with the merger with Mountain Crest Acquisition Corp. Before then, you could have purchased the MCAC stock on your brokerage, but There were no guarantees for a while that this would have been merging with Playboy. I'm not sure the quite merger date. It looks like around somewhere in December or January. And you could have picked this stock up for $10, or you still could have waited until March and picked it up for 11. So don't think you've missed the boat if you think, oh crap, it's already doubled within a month. It does not matter where it's been. The most important thing about a stock is where it's going. You can never really care too much about the past stock chart or price. It only matters where the stock is going and where the company is going in the future. So if you like this video, give it a thumbs up, subscribe, and come back for more content. Thank you. Thanks for watching.